In this video, we're going to review the 20 best high-yield dividend stocks to buy. So, before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. There is no established definition of a high-yield stock. The majority of investors would consider it to be a stock with a dividend yield that exceeds a popular benchmark, such as the S&P 500 index or the 10-year U.S. Treasury. The dividend yield on the S&P 500 has been less than 1.5% on average in 2021, while the yield on the 10-year note has been between 1.25 and 1.75. So, many investors would consider any dividend above those levels to be high yield. Even if the dividend yield is a good starting point, investors shouldn't buy a stock just because of its dividend yield. They need to make sure that they can keep paying dividends. It must be a good company with consistent cash flow, a solid balance sheet, and ample room for expansion. With that in mind, let's go over our list of 20 high-yield dividend stocks that you might want to consider adding to your investment portfolio. Number 20. AbbVie, ticker, ABT. AbbVie is an American publicly traded biopharmaceutical company founded in 2013. It originated as a spin-off of Abbott Laboratories. Since it split off from Abbott Labs in 2013, when it became its own company, AbbVie has paid out great dividends. From the time it started to the middle of 2021, AbbVie's payout has gone up by a whopping 225%, continuing the dividend growth that Abbott started. Both of these companies are dividend aristocrats, which means that they have raised their dividends for at least 25 years in a row. Even though AbbVie's best-selling drug Humira will lose its patent-protected exclusivity in 2023, the rest of its lineup and the closing of its transformative acquisition of Allergan in 2020 put it in a great position to keep paying dividends and grow them. Number 19. AvalonBay Communities, ticker, AVB. AvalonBay is one of the biggest apartment owners in the country, and its high-yielding payout is supported by steady rental income. The Real Estate Investment Trust or REIT also has a strong financial profile, which gives it the freedom to keep building and buying new apartment communities to add to its portfolio. Even though AvalonBay hasn't raised its payout every year, it has done so at a rate of 5% per year since its first public offering, IPO, in 1994. As long as people want to live in apartments, this REIT should be able to keep raising its dividend in the years to come. Number 18. Brookfield Asset Management, BAM. Brookfield Infrastructure runs a diverse group of infrastructure businesses with a focus on utilities, transportation, the middle of the energy supply chain, and data. These businesses have a fairly stable cash flow that allows them to pay their dividends. Brookfield plans to raise its dividend by 5% to 9% per year over the long term. This will be made possible by the growth of its existing businesses and by buying new ones. In August 2021, it bought most of Canada's Inter Pipeline Limited, which is likely to be a growth driver for the next few years. Number 17. Brookfield Renewable, ticker, BIP. Brookfield Infrastructure's brother is Brookfield Renewable. Both companies are run by Brookfield Asset Management. This Brookfield company focuses on renewable energy sources like hydroelectric, wind, solar, and energy storage facilities. Long-term power purchase agreements with utilities and other end users back up the steady cash flow from these assets, which helps Brookfield pay its high-yield dividend. The company also plans to increase its payout at a rate of 5% to 9% per year over the long term. This growth will come from both organic growth and more acquisitions, such as an extensive pipeline of new renewable energy development projects. Number 16. Consolidated Edison, ticker, ED. Con Ed, or Consolidated Edison, is an electric and gas company that serves the New York City area. It is also the second largest solar energy developer in the country. Con Ed has a great track record of giving dividends. The dividend aristocrat has raised its payout for 46 years in a row, which is longer than any other utility in the S&P 500 index. This trend isn't likely to end soon, since the company keeps spending money to expand its operations, including more money on renewable energy, as the U.S. economy moves faster toward cleaner energy sources. Number 15. Crown Castle International Incorporated, ticker, CCI. Crown Castle is a REIT that owns communications infrastructure in the U.S., such as cell towers, small cells, and fiber optic cable. This infrastructure is important for supporting 5G, the next generation network for the mobile industry. Crown Castle sees a chance to invest in new 5G infrastructure that will last for decades. This should lead to 7% to 8% annual dividend growth. Number 14. Digital Realty, ticker, DLR. Digital Realty is a real estate investment trust or REIT that runs data centers. The company has paid out good dividends in the past. It has increased its payout for 16 years in a row, at an average rate of 10% per year. This trend should keep going up because the world needs new infrastructure to support the rapid growth of data. Number 13. Enbridge, ticker, ENB. Over the years, Enbridge, a Canadian company that builds and runs oil pipelines, has been a great dividend stock. It has paid dividends for more than 66 years, and in the last 26 years, it has increased its payouts by 10% each year. If Enbridge wasn't based in Canada, it would be a dividend aristocrat. As the world moves away from oil and toward cleaner fuels, Enbridge is adapting by putting money into infrastructure for natural gas projects and offshore wind farms. Because of these investments, the company is on track to increase its cash flow per share by 5% to 7% each year until at least 2023. This should allow the dividend to continue to grow. Number 12. Enterprise Products Partners, ticker, EPD. Enterprise Products Partners is one of the top oil and gas companies in the midstream market. The payout from the Master Limited Partnership has gone up for more than 20 years in a row. The company focuses on fossil fuels right now, but in 2022, it set up an evolutionary technology group to look for opportunities in the energy transition. These future investments should give Enterprise the fuel it needs to keep raising its dividend. Number 11. Gilead Sciences, ticker, GILD. Gilead Sciences Incorporated is an American biopharmaceutical company headquartered in Foster City, California, that focuses on researching and developing antiviral drugs used in the treatment of HIV and AIDS, hepatitis B, hepatitis C, and influenza, among others. Gilead Sciences has one of the best dividends in the biotech industry. The company has a good track record of paying dividends. Since it started doing so in 2015, it has increased the amount it pays out every year. The biotech is held together by its strong HIV franchise. But Gilead has also been able to make money off of remdesivir, one of the few approved treatments for the recent pandemic-related illnesses and an antiviral drug that it makes. It is working on a number of other drugs that look promising and should help sales grow in the future. Number 10. Intel, ticker, INTC. Intel Corporation is an American multinational corporation and technology company headquartered in Santa Clara, California. It is the world's largest semiconductor chip manufacturer by revenue, and is one of the developers of the x86 series of instruction sets, the instruction sets found in most personal computers. Over the years, the tech giant Intel has steadily raised its dividend. Even though the chipmaker hasn't raised its dividend every year, for most of the 27 years since it started paying dividends, it has given investors a raise. The company makes a lot of money, which lets it grow its business and give billions of dollars back to its shareholders through share buybacks and dividends. Number 9. Johnson & Johnson, ticker, J&J. Johnson & Johnson, a big name in healthcare, has raised its dividend for nearly 60 years in a row. This makes it a dividend king. By making new products that help improve health around the world, the company has always paid a dividend that is both attractive and growing. One of its most recent achievements is the only vaccine that can be given in just one shot. Because the company is a leader in improving health outcomes, its sales and dividends should keep growing. Number 8. Medical Properties Trust, ticker, MPW. Medical Properties Trust is a real estate investment trust that owns hospitals. The company buys hospitals from healthcare systems and then rents them back to those systems. Because of this strategy, it has been able to steadily grow its portfolio, cash flow and dividend, which has grown at a 5% compound annual rate for the past 8 years. Medical Properties has a huge chance to buy more hospital properties, which should help the company keep growing its dividends. Number 7. 3M, ticker, MMM. 3M is an American multinational conglomerate operating in the fields of industry, worker safety, U.S. healthcare and consumer goods. 3M has been a great dividend stock for a long time. The industrial conglomerate has paid dividends for more than 100 years, and for the past 63 years in a row, it has increased the amount it pays out. It's also a dividend king because of this. The company's strategy of investing in new products, which has led to more sales and allowed it to keep raising its dividend, has been a big part of its steady growth. Number 6. Pfizer, ticker, PFE. Pfizer Incorporated is an American multinational pharmaceutical and biotechnology corporation headquartered in New York City. The company was established in 1849. Pfizer develops and produces medicines and vaccines for immunology, oncology, cardiology, endocrinology, and neurology. The company has several blockbuster drugs or products that each generate more than $1 billion in annual revenues. Pfizer has been giving out dividends for more than 330 quarters in a row. The drug company had planned to cut its payout after its Upjohn unit split off and merged with Mylan in November 2020, creating a new company called Viatris, Nasdaq, VTRS. Pfizer, on the other hand, decided to keep its high-yielding payout because the company is doing well financially. This is partly because its vaccine is selling well. Most people who get this vaccine need a third booster shot, and after that, they might need one every year. This means that Pfizer should continue to make enough money to pay dividends in the future. Number 5. Procter & Gamble, ticker, PG. The Procter & Gamble Company, P&G, is an American multinational consumer goods corporation headquartered in Cincinnati, Ohio. It specializes in a wide range of personal health, consumer health, personal care and hygiene products. These products are organized into several segments including beauty, grooming, health care, fabric and home care, and baby and family care. Procter & Gamble, a large multinational corporation that makes consumer goods, has raised its dividend for 65 years in a row, making it a dividend king. It looks like this steady rise will keep going. The company has a great track record of increasing sales by buying and making household products with well-known brands to meet consumer needs. Number 4. Realty Income, ticker, O. Realty Income Corporation is a real estate investment trust or REIT that invests in freestanding single-tenant commercial properties. The company is headquartered in San Diego, California. Realty Income is known as the monthly dividend company. The REIT has paid its dividend every month for more than 600 months in a row. Even better, since it went public for the first time in 1994, it has increased its payout by more than 100 times, or at a rate of more than 4% per year. That's more than 25 years in a row, which makes it a dividend aristocrat. Acquisitions have been the main source of this growth. Realty Income made its biggest purchase in 2021, when it merged with another REIT, AbbVie, to make a $50 billion real estate giant. This deal gives it the size it needs to continue to grow. Number 3. Verizon Communications, ticker, V. Verizon is an American multinational telecommunications conglomerate and a corporate component of the Dow Jones Industrial Average. Verizon has been a great income stock over the years. In 2022, the company raised its dividends for the 15th year in a row. Verizon should be able to keep raising its dividend as it makes investments to move its mobile network to 5G, which will give its customers faster data speeds. Number 2. The Walgreens Boots Alliance, WBA. Walgreens, a big pharmacy chain, has been giving out dividends for more than 88 years. In each of the last 46 years, it has increased the amount it gives out, making it a dividend aristocrat. The company's ability to keep adding stores has helped it grow steadily. In 2022, it had more than 21,000 stores around the world. As the need for healthcare continues to grow, Walgreens should be able to keep growing its business and dividends in the years to come. Number 1. W.P. Carey, ticker, WPC. W.P. Carey is a REIT that owns a portfolio of different types of real estate. The company has a great track record of paying dividends, and since its first public offering in 1998, the amount it pays out has gone up every year. W.P. Carey has been able to keep growing its portfolio of commercial real estate that brings in money, which has led to this steady growth. The REIT can keep growing in the coming years because it has a strong financial profile. All 20 of these dividend stocks have a higher yield than average, which makes them stand out in a low-yield market. Even better, each one has a strong track record of steadily increasing its dividend and shows no signs of stopping. Because of this, they are great stocks to buy and hold for a long time if you want to make money. Which of these high-yielding stocks would you like to include in your portfolio of investments? Please share your thoughts in the comments section. Remember to like this video and subscribe to our channel for weekly updates on the top stocks to buy and the newest wealth-building investment strategies. Thank you for watching, and happy investing!